Well, Scott, I like the market long term. I mean, actually, it's 18 times earnings. S&P is 18 times this year's earnings or forward 12 months earnings. That's very cheap. X-Tech, it's 15 to 16 in a low interest rate environment, even with the Fed hiking. That looks good. But I think the Fed next Wednesday is going to sound hawkish. I think Powell's going to be hawkish. So I think the market's going to have to digest that. I think there might have to be a little more capitulation. I mean, I would love actually the VIX to get above 40 for a day or two to really flush out all the margin and all the overvaluation, which I think has mainly been flushed out over the last 9 months, 6 months particularly. So I think we're very near a bottom, maybe not quite there. It's very hard to predict the short run.
Well, very near a bottom, but not quite there. You know, it's interesting when you say that Fed's going to be hawkish and the market's going to, these are my words, not yours, are going to have to come to grips with that. I thought the market already knew it was coming, Professor. So what are we still trying to come to grips with?
Well, the market knows it's going to be hawkish. Most of the journalists who are going to ask questions are going to say, hey, we had negative GDP. Aren't you worried about a recession? And I think Powell's going to be pretty tough on that, rather than saying, yeah, we're going to have to look at it and we may have to moderate our increases. He's been so behind the curve. You know, what you have is a pendulum. They've been so behind. The worry is, are they going to stay too tight, saying, you know, listen, you know, we're not going to get that criticism anymore. So I think he's got to show a firm face, even though he himself is saying, you know, our medicine may be beginning to work. By the way, Scott, let me say, you know, I look at the money supply. We had that report last on Tuesday, and 2 months in a row, we've had a meaningful slowdown in the growth of that money supply, and that's an absolute prerequisite for slowing inflation. Now, with all that said, you know, we have 25% more money in the system, even after trend corrected, than we did before the pandemic. And we've only had 7% more inflation. So I think there's still a lot of pent-up inflation that's going to be reported in those statistics. And, you know, the Fed is going to be very, very sensitive for having started so late. So they're going to have to put on a very tough face on this. But I was encouraged by the first time since the pandemic that we were actually looking like we're controlling the supply of credit. We need many, many more months of that moderate monetary growth to really slow down this inflation. And honestly, I don't think it's going to happen for another 6 to 12 months. We're going to be maybe a little lower than now, but we're running 5 and 6% inflation for quite a while.